Hey guys, Boris with BK Forex. Welcome to the weekly technicals for April 3rd to April 7th for the majors for euro dollar, dollar yen, pound dollar. Here comes the data. That's really the big story this week because it's really a very data heavy week after a relatively light week last week. Although the question is whether data is going to have much of an impact on price very much remains to be open, because at this point the primary themes essentially create a standstill in the market. One of the things you may have noticed is just sort of the kind of low volatility environment that we've had most expressed in the COM dollars, but the majors also really not moving much one way or the other. Dollar yen seems to have found support. Euro dollar is suffering its own problems because of QE issues in the Eurozone, and the pound is an open question mark. Let's take a look at the calendar first, and then I'll try to get back to the themes and see where the technicals lie. For the cable side, there's a lot of very important data going forward because we have really now post-Brexit. We formally announced Brexit last week. Post-Brexit, we have a whole bunch of data coming out that's either going to confirm the idea that UK economy is actually starting to slow down, which is a very, very dangerous place to be because in many ways, one of the biggest arguments for pro-Brexit supporters was that hey, look, nothing bad happened. We declared Brexit, and actually the UK economy was one of the fastest growing in the G7 universe. And of course, the flaw in that argument originally was that, yes, of course, it was one of the fastest growing economies in G7 universe because it had a massive currency devaluation while remaining within the European market. Now, with the currency devaluation already pretty much factored into the trade, the bigger problem becomes inflation to the consumer, which means slower spending and perhaps, and this is going to be the really key thing, to try to understand the impact of business sentiment on Brexit going forward. Are businesses going to be curbing investment plans as we go forward? Because one of the interesting things that I think the Brexit bulls or the pound bulls are underestimating is the possibility that UK economy starts to fall off a cliff at the same time as they're negotiating, which puts them into a very, very weak negotiating position, because if their economy continues to contract, they're not going to be able to dictate terms to the Europeans. So be interesting to see. At this point, I think cable certainly much more of a sell than it is a buy at these levels, but it could be a bust out buy if I'm wrong on the data. That's why the data in many ways is going to be most interesting on the UK side. So we have manufacturing PMI coming out, we have construction PMI coming out, and of course the big granddaddy of them all. This, by the way, actually comes out. Where's services PMI? Where's my UK? Here's services PMI on Wednesday. This is really the big granddaddy of them all. Now, the key thing here is if it's a fair to Midland print of about 53, that's fine. If we start to move closer to 50, that's going to create a massive, in my opinion, massive red warning sign to cable traders, and I think cable goes right back down on a relative weakness trade. So I think it's very much worth watching for cable. On the U.S. side, of course, it's all really about jobs. We have ADP, we have ISM manufacturing, we have ISM non-manufacturing, and all of the growth. The jobs are really not the issue because the market, I think, is pretty content and anticipates 150,000, 175,000, 200,000 print. It really becomes this question mark. This has been a slow, steady, but not a spectacular growth. And until you see sort of 4% or 0.4% or 0.5% even, sort of a 0.5% gains in average hourly earnings, until you see any uptake in average hourly earnings, the inflationary pressures for dollar bulls are just simply not there, and that's the reason why the dollar has not been able to rally nearly as much as the market anticipated. In addition to which, we also have the FOMC minutes, which of course are going to be valuable, sort of a secondary look. At this point, what's interesting is I think the conventional view from the Fed, or at least the communication from the Fed that everybody seems to be coalescing around, is not 3 rate hikes, but 2 rate hikes for the rest of the year. The Fed has taken a look at the situation, sees that the U.S. economy is growing at a steady but unspectacular rate, and therefore there's very little danger of runaway inflation. Therefore, there's very little danger to really accelerate monetary policy. All of this means that the dollar really just doesn't have much of juice to go forward, and that's really going to be key. So the whole thing that would flip the dollar, in other words, that would really flip the switch for a strong dollar rally, is if the data this week completely changes the market sentiment that creates a much stronger, more upside view. That's doubtful in my opinion, but worth watching. Now, Euro, its own story. The Euro story here is fascinating because the inflation in the Eurozone has really been surprisingly weak, and that's created a whole new theme that the ECB, which was anticipated to really begin to start to curb QE, may be willing to let QE go for much longer because they're really trying to reflate the economy. The economy itself, the underlying demand in the Eurozone is actually quite good, but this negative sentiment in the euro has certainly taken its toll last week. We had a big correction off the 108s all the way down to 106.50s. The 106 becomes now a very key support. I think that this week, technically, where everybody's going to be really focused on is this 106. Do we hold it? Do they try to run it and come back up above it? There's certainly a temptation here to run it, I think, in the first couple of days just to see how much support there is. The critical thing is how it trades after that. If we make it all the way down to 105.50, that's going to be a very negative technical development. On the other hand, we kind of sort of hold the 106s for a day or two. That becomes actually a positive development because it becomes, to me, a value proposition from which point you could begin to accumulate euros for another run back up to the 108s. Because you certainly, if the 106 holds, you certainly preserve the upward trend, and the overall economic structure in the Eurozone is relatively positive. So you, against a dollar backdrop that is really not mild, super bullish. So all of this sort of suggests a bargain opportunity here in the euro, assuming, and this is a very, very big assumption, you really need to make sure that we don't take it all the way down to 105.50. If they test the 106s and hold it for a day or two, then definitely I think it's a much more attractive proposition for a long side. At this point, of course, support is 108, resistance is 108, pretty hardcore resistance, but the tilt we still haven't broken the upward tilt. Higher lows suggest that we still have the possibility here for more upside in the euro. As a matter of fact, pretty decent bargain prices in the euro at this point if you take a gamble. Yen has been a negative trade for forever, and I've just tired of myself talking about the failure of the yen. The one interesting thing that happened last week was that it's a little bit of a washout trade, and that I think is worth noting. We washed out at the 110s. We could not break the 110s. 2 days of support. In fact, this kind of a technical structure is exactly what I'm looking for in the euro. If we have 2 days of support at the 106s, then the possibility of a short covering becomes much, much stronger, much higher. So similar kind of scenario, that's what happened in the yen last week. We held the 110s. The bigger issue, and this is where this week becomes so critical, what if US data is weak? If US data is weak, then this 110 gets tested again. Now, the third time could very well be the charm. That's the thing. If we start to drift towards the 110s and actually break it this time, that's a much more negative construct than you can possibly imagine. And therefore, that creates much further and much steeper momentum sell-off to possibly down to 108s. It really, for the time being, to me, the dollar continues to be a very negative trade. What could turn it positive, or at least mildly positive, is a break above 1250. Positive US data, break above 1250, then we've really confirmed the bottom at 110, and then you can get more comfortable trying to trade this back up to the 115s. But for now, the 12 got rejected, and if there's a slow drift down to the 110s, I'd be watching that very carefully because a break of the 110s opens up the move all the way down to 107.50s and preserves this whole negative bias that we've been watching for the last 3 or 4 months. So preponderance of risk is to the downside on the yen. Mild preponderance of risk is to the upside on the euro. And cable is, its own little story of confusion and destruction, because cable, of course, is the short squeeze master of the world, and this was a massive short squeeze post-Brexit. However, and this is where I think, just as the shorts got completely destroyed trying to trade the bottom here, I wonder if the longs are going to get faked out at this 126 level. This 126.27 level is a 1, 2, 3, 4, 5 quadruple top resistance. Probability says you got to short this against this possibility, especially, and this is the key thing, if you can get negative data out of UK, the possibility that this is a pretty decent short really increases all the way up to, I would say, a 128 hold. Then you're absolutely wrong. If it clears 128, you're clearly wrong. But from 26 to 28, a short position on the assumption that the cable starts to come back down, quite possible. We faked out the shorts this week. It may be the time to fake out the longs next week. So that's how the majors shape up. Wish you guys the best luck, the best of trading. Boris, over and out.